company that I meant to talk about last week and ran out of time, but I've got it lined up now, so we will talk about it here. I said at the start of the year I was going to start talking about some more things from the AIM, and I thought there might be some interesting companies there, and I had a bit of a dig around before and continuing to dig. And here's a company that I guess is inspired by some of Steve's recent forays into the sort of healthcare market and things that we haven't talked about before. Company is called Tristel. I learnt this when I listened to their earnings call, or their company meets investors session, as they call it. Previously, I thought it was called Tristel. It's not. It's called Tristel. Good name. Has a market cap of 154 billion, and it's a growth stock, Steve. So let's start in the important place when we start with growth stocks. It's, of course, the balance sheet. The balance sheet, it has 11.8 million in cash. And as of its latest report, at any rate, it has no debt. 11. Oh, you're right.
You said billion.
It's not got 11.8 billion. It's also not
market cap.
Oh, it's 154 million market cap. It's smaller than that. We don't have things that size on the AIM, or indeed anything near it. So sorry, 154 million and 11.8 million in net cash on its latest report anyway, and no debt. Yeah. So there's a reason to buy it to start off with, but there are probably some better reasons to consider buying it anyway. Having got that out of the way then, it has two main divisions, this company, or it has two main kind of product ranges. There's the bit that's called Tristel, which is their kind of signature range, and there's the bit that's called Cash, which is like clearing the cache, CACHE, which is slightly different, but both of them are about hospital decontamination and disinfection. And Cash isn't that interesting as far as I can tell, although they are trying to get a bit more from it. It's a surface decontamination bunch of products that makes it sound like it's got scope to be used kind of all around the hospital, and there's some big market to sell into, but that's probably not really that realistic. Tristel's products, both sides, are expensive, they are premium, they are high-powered things, and my suspicion is that if you're trying to target an entire hospital, there's going to be plenty of things that are going to not need the most super sophisticated decontamination tech and chemistry. Effectively, but they are attempting to focus on specific things like ICUs, neonatals, operating theatres, where the added value of a really good decontaminating system that has the benefits that Tristel has, more on those in a second, really matters. It's about 10% of revenue, so let's bypass that bit for a bit. The Tristel signature product range focuses on decontaminating stuff like surgical devices, and it comes in sort of two main varieties. There are some wipes and there's a foam. So the big interesting thing about this is that it uses a chemical called chlorine dioxide, which sounds like a pretty basic sort of compound, and it maybe is, but it has a lot of advantages over traditional chlorine-based cleaners, and these are the only people who make chlorine dioxide-based disinfectant products. One of those advantages is that it's about twice as effective, but there are some more specific benefits as well. One of these is that microorganisms can't build resistance to chlorine dioxide because it works by taking electrons from them, from microorganisms, and damaging their cell walls, which means they can't build resistance to it. Another is that it has fewer harmful byproducts because it has low oxidation potential. They go into this a bit more on their website if you're interested in the fine details of the chemistry, and by the fine details, I don't mean the sort of really technical stuff, I mean just slightly more than I've said here, but that does mean that it's less likely to harm the surfaces that it comes into contact with and makes it compatible with more devices than it might otherwise be, or other things. And you might wonder, an obvious question then is why nobody else is making products like this, and the answer is because Tristel has patents protecting stuff, not on chlorine dioxide itself, but on the distribution systems that it uses, so the kind of pumps and wipes and that sort of thing. These are expiring in some cases, and they're expiring in the fairly near future, but management reckon there's a kind of second layer of technical know-how that makes copying these difficult, even if it's not sort of patent protected. Okay, other main benefit is it's a lot faster to disinfect something by wiping it. So typically decontamination of surgical equipment or machines looks like either taking the machine away and soaking it in something, or blasting it with heat, and wiping them is much quicker. You can do it in the room it's being used rather than having to take it away. And it's suitable for things that can't withstand that kind of heat because they're in some ways delicate or sensitive, so you can wipe them and they tend to be faster and more efficient and better. And if you are a efficiency-minded hospital, then this is a big benefit. The downside, from a customer perspective, is that it's expensive. So it's probably not a replacement for everything, but Tristel is busy aiming to target some important niches. And that's where the value for customers really counts. So a good example being stuff like ultrasound probes. In terms of numbers, sales from October, which was its end of year, were 41.9 million, which was up 16%. Earnings per share were up 45% to 13.6p, and the dividend, obviously, was up 29% to 13.52. But the February results, which are their interims, were not so clever by any means. Revenue was up 8% and EPS slipped back. The dividend still went 8% up. We can talk about that a bit more in a bit. Puts it at a PE ratio of 25, Steve. So the question is, where's the growth coming from? And the answer is overseas expansion, by and large. Company's been trying to break into the US for some time. That's a huge market. They know it's a huge market, and they are focusing hard on trying to get there. They've got FDA approval for their ultrasound products, and they're expecting to get more for their approval this year for their ophthalmic decontamination stuff. So with ultrasound, they go via a distributor because it's a difficult market to break into, and Parker Labs, who are their distributor, have a particular expertise in that kind of area. And attempting to displace an incumbent is tricky. Ophthalmics they view quite differently. They think this is a much more fragmented area where it might be easier to kind of take market share away from established operators here. It's not just about the US, I guess. It's expanding across Australasia, Europe, Asia, various other ways through a mixture of distributors and going direct. But there we have it for the moment, Steve. Anyway, Tristel, net cash, a 4.3% dividend yield. Everything we look for in a growth stock, right?
I could add a little bit to Steve, actually. I have been having a dig around, and I recognised the new CEO. He is from Massimo on the Nasdaq, one of the big. They're not one of the biggest, but they're about 9 billion kind of size. Sort of medical technology, medical equipment company, and to see him leave Massimo to come to Tristel points to good things. I think, Steve. It looks like they've brought on a guy who knows the American market pretty well. He has maybe some decent contacts to bring with him, and I wonder. I just wonder how well he will do in exploiting those contacts he has, and that could mean good things for them because it's such a small company at the moment, Steve. It wouldn't take huge amounts of sales in America to really get that revenue number growing. Not that it isn't at the moment. So yeah, really, really interesting. Of course, it pays a dividend. Well, I say really interesting in terms of opportunity and financials. I'm not sure wipes and disinfectant is right up there with my favourite things in the world, Steve. But yeah, I think do you know what? This is actually a really good report as well for what it is. There's like 120 pages here, but it actually is quite well. They're quite good at spelling out exactly what they're up to and why they're doing it really as well. Really good at little explainers as you go down it as what things are. There's quite a decent segment a bit later on about the strategic assets as well, which tell you quite a bit about this chlorine dioxide chemistry and tells you a lot about the patents as well. So for that to be in the just in the annual report is really helpful for people who want to try and understand the science behind it and how they've managed to protect that science. So 149 patents in 32 countries. It looks like they've just had some FDA approval for a couple of their products. Looks like the foam and the wipes have been FDA approved. So yeah, it looks like it's all go for Mr. Massimo, who's come over. Let's see if he can put that pedal down, Steve.
It's an interesting business for a couple of reasons at the moment. I mean, it's down 25% since the start of the year because their latest set of interims did show quite heavily slowing growth. They flagged a few specific things that they think might kind of clear away there, but make of that what you will. If you zoom back over the last sort of 10 years or so, what you don't really get is a nice, neat kind of revenue curve. But bear in mind, and I think this makes a lot more sense when you keep in this thought in view, this is in the context of being a hospital's product, and decontamination becomes, it's not really cyclical, but if you do get a pandemic, you do tend to see demand pulled forward. I think is probably a fair way to think about this. So they did see what we've seen a lot of companies in this sector see which is sales spike and then dip off a bit as places start working through large inventories because they bought heavy during the pandemic and then they didn't keep buying heavy at that rate afterwards. There's a bit more cyclicality to this than you might think. I mean, it's their kind of core product, which is their Tristel product. They are busy attempting to establish as a standard. They're going via OEMs, getting them to use and present and approve these sorts of things. Germany has recently announced there's heavy regulatory approval around this, which is both good and bad, right? It's hard to get past, but it's good when you're on the other side of it. If you can get your regulators to say that, yes, just wiping this thing with a Tristel wipe is a good enough way of decontaminating it, then there's big upside here for hospitals and so on. Here's one thing I don't like about this company. I can't actually verify this anywhere, but I've seen it in a couple of places where I was trying to research, so I can't verify it directly at first hand. Dividend-wise, they have apparently committed to growing their dividend 5% per year going forward, regardless of EPS growth. And that strikes me as surprising. It's not impossible to me that they think that they will generate enough cash to do this because they currently have it knocking around. I don't love it in general when companies say, come what may, we're pushing this dividend higher. I would much rather they said at this stage, we'll see. I don't think many people should view them as an income stock particularly. I think they should view them as growth mode. And if you see an opportunity to grow by investing in behind your product and its distribution one way or another, then take it. I was very torn when I read that between two thoughts. One is that I like it when companies grow without needing to use their cash and can return it. See sort of Games Workshop and so on. That's a good thing. I don't love it when companies make a rod for their own back by telling you they're going to give you cash back before they've made it. So I was very torn by this thought. Eventually I came down on the side of I can see past it, but that gave me pause.
Yeah, it's an unnecessary claim. I guess one of the other things they've pointed out in this report, Steve, that I've just been flicking through, is a higher level of supply chain scrutiny post COVID. They're saying that, and probably rightly so. There's a lot more scrutiny on these kinds of products especially after what happened in the scandals in the UK of PPE scandals and what have you. There's a lot more hoops for them to jump through, a lot more bureaucracy, and a lot more scrutiny on supply chains. And I think that is holding up some of the sales moving forwards. But yeah, I would expect that to clear in due course, Steve. So yeah, really interesting.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.